Oh, I gotta admit, it's fun to be right. Yesterday we spoke about silver crash. Wall Street preparing for 15-20% crash. And guess what? Today, silver crashed 15%. But that's okay. Silver investors, you're good to keep holding, I guess. So, very important. The crash is coming actually from Shanghai. It was a particular event on Shanghai Exchange, and people in Asia, they have much deeper pride in holding or investing in precious metals. But the same hype, the same frenzy, the same issue that they don't see, like a lot of people around the world don't see, it's about to unveil even bigger crash. Pay very close attention. This particular silver drop was effectively part of the exchange prevention bubble burst. The drop took spot, silver price below 75. Later, it went even lower, triggering even greater explosive activity on Shanghai Exchange. They effectively have bigger and more stricter restrictions than New York Stock Exchange or Nasdaq or other precious metals exchanges around the world, simply because the volatility is greater. So they don't have so much other options like we do have here in the US markets to invest. So when they want to double down, triple down, when there is strong frenzy, they could lose much more money than the average traders here from Wall Street bets, for example. Look at this. The gold also fell 5%, which meant that the issue over here was the general perception that these investments like precious metals are secure and will not go down, and they work and play the role as a hedge against particular market volatility. But this was not the case. And this is nothing. This 15% only alone appearing on the Shanghai Exchange is nothing. This is just the beginning. Because when, for example, silver goes back down around 40, 50, 60%, this is not Bitcoin. This is not some of the popular cryptos where there are a bunch of young people who will be buying the dip and will go back up again and things will go smoothly, right? No, this is old stuff, right? This is like outdated material of investing. When these things plummet, nobody will be interested looking at. People will be more interested in investing in, I don't know, something else, buying government paper, because there is a very thin liquidity. Not enough people are buying every single day, which means it is probably easy to get in, it's hard to get out. Gold might be a different story, but again, trading the actual paper on the precious metals is super duper risky. This is not you buying your chains and golds and having the physical gold. You can go and sell them into the shops and people can either melt them, make something out of it, resell them in the shops. That's a completely different story. Here you're buying daily volatility. And daily volatility is based on the interest, on the price action, on the overall economic situation. The overall economic situation is bad everywhere around the world. And this should be good for precious metals. But guess what? They do not have the negative beta anymore, which means that they're no longer moving in the opposite direction when the markets are crashing. Because look at what happened. Today we have the stock market crashes, we have the crypto market crashes, we have the precious metal market crashes, we have the oil prices crashing as well. What the heck this even means? This means that there is a crash of everything right now. So people who were so smart, or they thought they were smart, they sold their crypto, they sold their stocks, they sold their oil futures, right? And they said, okay, I'm gonna go fully protective hedge investing portfolio. I'm gonna buy only silver or gold or mix of it. And they woke up and the whole market is crashing and their portfolio is crashing as well. So what this even means? This means that the silver and gold are not hedged anymore against any market volatility, short term, long term. And if you look at the market, for example, the stock market has fallen 1.5%, S&P 500, while the silver is down 15%, while the gold was down 5 to 8%. What is this even telling you? That if there is a huge, gigantic, freaking market crash, recession fears and validation of negative GDP to consecutive quarters, where do you think, if the market is just falling 1 to 3%, where the precious metals will go with this same perpetual escalation, with a ratio of 1 to 3, 1 to 5, 1 to 20, in particular with the silver? This means that if for every 1% S&P falls, the silver rest of the day fall 15%. So if the S&P 500 falls 2%, the silver dump will be 30. If S&P falls 3%, then you're going to see 45% drop in silver. Approximation. Same thing for the gold. The ratio, it will be 1 to 5. When 5% dump today on gold equates to 1% dump in S&P 500. So 2% dump in S&P 500 for, let's say, report of negative GDP, negative growth whatsoever, it will equate to 10% dump in gold. And you can continue to do the math, can multiply and see what you can actually expect. Why this is so important? Well, this is so important because if you purchase gold and silver with a single goal and idea to protect yourself, not losing money, capital preservation, not really hoping to make some money, but at least to preserve your $10, $50, $100,000, looks like it's not going to work. If it works previously, if previously people were holding gold, people were holding oil stocks, right? People were holding US treasuries. It's not going to work anymore. And this is happening in real time. We're not looking 50 months from now trying to predict something that is not. This is happening in real time. Yesterday I told you, I showed you. What else do you want me to do? I showed you exactly how the setup of Wall Street was preparing for 50-20% down. And people, it's not gonna happen. I want to see the faces of these people who always pretend to be so smart. They always know more than Wall Street, but they're poorer. How these people even gather self-confidence to speak when they're broke and they know nothing and they'll keep losing money every single day on every single market, every single year. When they're gonna give up and say, okay, I don't know anything, I don't understand anything, just forget about it. Stop talking nonsense. Again, Wall Street knows exactly what is going to happen. Always remember this. Why? Wall Street spends majority of their budget, each of the investment firms, on gathering information. They don't trade securities, they trade information. So most of the funds, most of the expenses of running the business are actually tied to gathering important information. When they have the information from the right people, they make their bets, okay? So these people are not throwing darts at the board. These people know exactly what is coming. This is why they're betting hundreds of millions of dollars. Just bear this in mind, okay?